with $1,000, you're starting on your way to being an entrepreneur, separating yourself from a mindset from the friends that are like, yo, let's go to the club tonight. Nah, man, I'm trying to start a business. Take that $1,000 and do something else. How you gonna buy a $500,000 home and you owe T-Mobile $250?
Yeah.
True.
Agreed.
Doesn't make sense.
Speed my rants and gems. Speed my rants and gems. Yeah, I can do it, we discover. Peace to all the kings and the queens, word the mother lie.
Yo, Gem Droppers, we are back with another incredible episode. Look, in this episode, well, let me rewind. We started off the beginning of the year with the building blocks with HEM 500.
Absolutely.
We talked a lot about personal credit.
Yes, we did.
And now, Kiana, we're bringing in our other resident credit expert, Jose, the credit dude. What's going on, Jose?
What's going on, sir? How you doing?
You know, we're alive and blessed, my brother. We're alive and blessed.
Yes, we are. We are alive and blessed, and we are grateful to have you here.
Awesome.
You know, I love the information that you share. We want you to come on here and talk about business credit, and most likely, people want to buy homes using business credit.
Right.
I want you just to jump right into it and talk about how they can build their business credit to purchase a property.
Yep. So I think one of the biggest misconceptions, though, I want to let you know is that you really can't build your business credit up with like NAV, you know, Dun & Bradstreet, Experian business or Equifax business, and then get a bank to, in a sense, pre-approve you to buy a home. So you could build your business credit up all you want. You know, they're still going to use other sources in a sense to, you know, to give you the funding needed. So usually what I tell people is you could open up an LLC today, not really build any business credit on it, but still get approved for a house on it.
Facts.
But if you want to go ahead and get an LLC today, and then let's say you have no cash, you can get credit cards, which is considered like funding as your down payment for whatever house you want to buy. So let's say if I want to open up a, you know, Rodriguez Management LLC, you know, if my personal credit is good, I get a couple credit cards, you know, PNC Bank, Chase, Wells Fargo, whatever the case is, and I can get a check from those credit cards to use as my down payment to purchase property. And that's where people need to know that that's how you can, in a sense, buy a house or buy an investment property using business credit.
Whoa. So let's rewind. First and foremost, for the audience out there, you do not need established business credit to purchase real estate. The lender is going to look at the cash flow of the property to qualify you. We're going to run your personal credit, make sure you have 620, 640, whatever that lender requires. You will personal guarantee it, but the mortgage will not be on your personal credit report. Yes. So I just wanted to break that down real quick before we move on to this business credit buying real estate.
Yeah, absolutely.
Because I put out a tweet the other day, about a week ago, whatever. Yep. And I said, what happened to all these folks that were talking about using their business credit to buy real estate? For me, I think that's a terrible idea.
Yep.
Me personally, right? Because I just feel like you're putting yourself in more debt to get more debt.
Yep.
Right now, I do know people who have successively purchased real estate by taking out, you know, whatever cash advances to buy real estate, but these were seasoned, experienced investors who knew what they were doing, and they had an exit strategy to pay back off that debt.
Yep.
But I see a lot of first timers jam themselves up by putting themselves into that debt matrix.
Yep.
Because it's business credit, it's not your personal name, but it's still your credit that you utilize, right? So do you recommend a first timer doing this strategy?
Absolutely not.
Okay.
I don't unless you have some money saved on the side, unless you have another business that kind of has some cash flow, unless you have some type of other revenue stream. But like if you could barely make ends meet, or if you could barely afford the credit cards on your personal credit and you don't have some type of like cushion, absolutely not. Because, you know, during the time of you, let's say you get $30,000 in credit cards, you put $30,000 down, you know, on a property.
Right.
You still got to carry some type of cost. You still need something. You still got to make those monthly payments, even if it's 0% interest, which a lot of these cards do come with 0% for like 12, 18 months. You still got to make the payments.
Yeah,
absolutely.
So it's like if you don't have something else covering that, that's why it's a bad idea. It's a very good idea, but it's not a good idea if you're not able to manage the payments. And if you're not one of those people that pays their stuff off every 30 days, every 60 days, you used to carry in debt, you don't know where you're going to get your next $5,000, $10,000 from, then absolutely not. Don't do it, because it's not the best strategy if you're not aware of how the debt, if you don't have any return on investment coming in right away, it's not a good idea. It's possible to do it. I don't suggest it unless you're seasoned, like you said, unless you have some experience doing it, or you have some other cash flow coming in somewhere. Don't get messed up in that, because then now your business credit cards are going to be maxed out. Then if you don't pay it, it's going to go on your personal credit. Your personal credit gets maxed out. You didn't do the deal. You didn't fix the house. You didn't do anything, and now
You flip-flop.
It flipped.
yeah.
Flip-flop.
And then now you try to do a strategy that you saw on Instagram or YouTube. Somebody try it, you tried it, and then it didn't work. No, you just weren't ready to do it. You know what I mean?
What a tragedy.
So
What a tragedy. And it happens every day.
yeah,
It does happen often.
Yep.
At least you cleared that up. Like, people want to, everybody's talking about business credit. Business credit is like the most popular thing.
Yeah.
Like, it almost as if, do you feel that business credit and personal credit is so separated that it won't affect the other, that one doesn't affect the other? Because people truly think that.
it goes hand in hand. If you want good business credit, you need to have good personal credit. Why? Because the same strategies and principles that apply in business credit apply to your personal. So if you think that you could just ignore your personal credit, have a 580, 520,
Right.
I'm gonna build business credit. Well, guess what, man? If you didn't pay your personal bills, you got to learn how to pay your business bills as well.
Exactly.
So I say it goes hand in hand, and that's why it's together. Like, if you get your personal credit up to a 720, 750, and you want to build business credit, you already have the same principles of paying on time, doing what you got to do, only applying when necessary. So you building business credit is going to come a little bit easier.
Absolutely.
You could do it at the same time. You don't need an 800 credit score. But I don't like how people say that, you could leave your personal credit alone and just build business credit. Or you could just leave your business credit alone. It's hand in hand. I feel like it goes together. And when you do it together and you build both of them simultaneously, you put yourself in a even better position. You double your borrowing power, and your mindset is just different.
Yeah.
You know what I mean? You just have a different mindset when it comes to things.
No, that's sick. So what about, like, all right, somebody's new, they're beginning in their journey of entrepreneurship. They want to start building up their business credit. What are the steps that they need to take to build up business credit and acquire business credit?
Right. So, I mean, I'll say the first thing is have an LLC, or any type of business for that matter. You don't have to have an LLC. You can have an LLC, S Corp, C Corp, get with a professional on what the right business is. Because what's crazy is we have a lot of people that come to us and say, I'm a sole proprietor. I have an EIN, but I'm a sole proprietor. You don't really want to build business credit that way. And even if you have a tax ID or EIN, if you don't actually have like a business formation document, that's what you need. Get your tax ID with the state. With the IRS, it's free. It doesn't cost you anything to get it. Get a business bank account, which I think is the biggest thing. So those three things have to happen like the same day or the same week. Like, don't get a business, get your tax ID, and then don't open up a business bank account.
Yeah.
Right.
I've made that mistake when I've opened up other LLCs, and you just don't want to do it, because then when you start applying for credit, what's your business bank account? I forgot. So just do all those three things like within the same day.
Okay.
And then the other biggest thing is, a lot of people are using their home address. So have you been seeing like people using their home address for everything? There's places. Now it's 2022. You have Regis.
Absolutely.
You have virtual offices. You have, I think there's another company called Opus. Like, there's a lot of other companies that you can use. $50, $100 a month. Get the virtual office. Stop putting stuff in your personal credit. And a lot of people say like, I'm a landscaper. I'm a photography company. I'm this. I don't have. It doesn't matter. If you're using your home address to build business credit, the risk factor just went up. And credit is all about risk. Credit score is a risk. Credit is a risk. So if you're using your home address for everything,
Right.
you could have an 800 credit score. You're still at risk because you're using your home address.
Absolutely.
So just spend the $50 to $100, and people are like, I don't have the money. Well, that's the thing. You can use your personal credit to leverage more credit to pay for the things that you need for your business credit. And we're going to talk about that today too.
I like
You know
that.
what I mean? So it's like, I don't have money to pay the $50 a month, $100 a month. Well, do you have a credit card? All right, well, use that. Just get one under the business. So you kind of got to do things in reverse a little bit. So like, let's say if somebody's starting out, like you said, and you have no business, but you have good business personal credit, or you're just starting out building business credit, call Regis up first and say, hey, I want to buy an office address. So you got to do it in reverse. Get the virtual address first, then open up the LLC, then get the tax ID, then get the bank account. Because now when you open it up, you're doing it with the virtual address.
That's what I was going to say. Everything goes to the virtual address.
Yep. And it's a little bit
And
easier.
it keeps it cohesive.
Yep. You know what I mean? And then now when you got the virtual address, now, you know what? To make my next payment, I don't have the money coming in. That's when you start using it. When you start applying for business credit card, which we're going to talk about.
Yeah.
But G Suite, you guys heard of G Suite with Google?
Yeah.
Of course.
Very cheap, right? You get a domain, you go to GoDaddy. You know what I mean? If you don't have a business yet, just say joserodriguez.com.
Yeah.
You know, thecreditdude.com, whatever the case is, get whatever it is, domain your name, domain something. And then when you get your business address, your email address, you go to G Suite, you connect it, and now you have a professional email address. You don't have like
get a business phone number
course.
too.
Yep, Ring Central.
Yep,
is
I
very good.
I use Ring Central.
Don't use I think it's Google Voice.
Yeah.
And there's like Vonage is good, Ring Central, because now it's a dedicated business address. One of the biggest misconceptions is people get like a phone number with Verizon, Sprint. It's still a cell phone number.
Yeah.
Even though you get it under business credit,
It's still a cell phone.
it's still a cell phone. I don't do it. I want to suggest you to do it. So this is the thing. Once again, how you were saying, like when people start building, when they want to invest in real estate, there's a lot of costs that come into it.
Absolutely.
When you start building business credit, there's costs.
Absolutely.
Think about it. Opening the
Address.
business, bank account. Sometimes you got to pay it monthly without even having any funds in it. Ring Central, virtual office, G Suite. You know, next thing you know, you're looking at $1,000 a month.
Hey, let's not forget about hiring your tax preparer or your
absolutely.
CPA,
The
your
whole team.
bookkeeper,
Right.
You know, attorney,
Right.
You know, things of that nature. So it definitely gets expensive.
And that's the thing. If your personal credit isn't in order, how are you going to pay for this stuff if you have no revenue coming in? And that's why it does go hand in hand, because a lot of these places, when you do start applying for business credit, they're going to be like, oh yeah, you need a personal guarantee because
Correct.
you're under 6 months, you're under 4 months, you're under 2 years. And that's the thing is if you do all that, LLC, EIN, bank account, virtual office, professional email, business phone number, a website, you're straight.
Yeah.
Like I believe that's truly the foundation
That's your business in a box, right?
of
there.
starting. Like,
Yeah.
and you couldn't do that yourself. For it's going to cost you $1,000
Right.
to probably start everything up. But where can you you with $1,000 you can starting on your way to being an entrepreneur, separating yourself from a mindset from the friends that are like, yo, let's go to the club tonight. Nah, man, I'm trying to start a business. Take that $1,000 and do something
Correct.
else.
Absolutely.
And start separating yourself. You know, get a Google My Business page. And then once you start becoming credible and with the eyes of the lenders, then now when you start building business credit, oh wow, this guy has a website. He has a domain. He has Google My Business. This guy has a professional email address. They have a professional, their name is professional. And that's just going to be a lot easier when it comes to building business credit. And I think a lot of people skip that. They just want the Amexes. They just want the lines
Yes,
of
of
credit.
course.
But they're not willing to do the foundation, kind of like how Marcus was talking about with the building blocks of credit. People want to skip that. You can't.
You can't.
You can't skip that. And with business credit, you really can't skip that. Now, here's the thing. Oh, I want a car in my business name.
Okay.
But everything is on your personal. You're using your home address, no bank
Right.
account, Gmail address, cell phone number, but you want a car in your business name, and then you expect the dealership to give you a car in your business name when everything is still in your personal credit.
So that's a good. I'm glad you went to the cause on the credit report, especially the personal credit report. Like
Yep.
I purchase vehicles in my business name, right? But there's a lot of folks out there, especially when trying to qualify for a mortgage.
Ooh, yes.
They're getting Range Rovers, they're getting G wagons, they're getting everything, and these cars cost
Bentleys.
a lot of freaking money. Bentleys,
Absolutely.
Lambos, we talking $1,500 to probably $4,000,
Right.
Right, and then although they're making money, they'll be able to pay for it, but now their debt to income ratio might be higher, and it limits their buying power. So, what are ways that someone can take their personal finance car out of their personal name and into their business name?
Yep. So once you have all that, what I just explained, set up, which can take you like a week or two, right? If you really dedicate yourself to it. If you have a car that's financed, not leased, that's financed with like 60, 72 month term, and you bought it under your personal credit, you can go to Bank of America website, and you could just Google it. Bank of America Business Auto Loan. It's like the Advantage loan or whatever the case is. And when you go on there, it's going to say, do you want to purchase a car under your business or do you want to refinance?
Oh, nice.
And what a lot of people don't realize is when it says refinance, that doesn't mean just refinancing under the business. That means you can refinance that car from your personal credit and put it under the business. But why can you do that? Because now you have an actual business set up.
Absolutely.
One of the biggest misconceptions is that when you do that, you need to have money going through your business. You need to have 2 years in business. That IRS, like, listen, I'm not an accountant, I'm not an attorney. Obviously, get with them. You know what I mean? But the thing is Bank of America is not going to say, you need to be in 2 years. We need bank statements. We need this. You're paying for the car. It's not like, because when you do this, they do check your Experian personal credit.
Okay.
And what's the minimum score they're looking for?
Honestly, man, it's crazy because I've seen people with like 620 get approved.
Wow.
But I've seen people with 750 get denied because they got a repo or a current late payment.
Oh, yeah. If you got negative
you just
history.
never know.
Yeah.
Right. And you just try it, because you already put the car in your personal credit. So one auto loan inquiry from Bank of America is not going to tank your credit score. But I always tell people, listen, you know where your credit is at.
Absolutely.
If you got maxed out credit cards, I don't need to tell you to not do it.
Yeah,
You know what I mean?
100%.
But the thing is, Bank of America, they're willing to do it. And now what happens when you refinance that car on your business? Now you build business credit. Because now that auto loan is an auto loan reporting to your business credit reports. It's off of your personal credit. Your personal credit might go down because you're closing the car loan. Obviously, whenever you close a car loan, your score does go down a little bit. But it's okay because what's the benefit? Debt to income ratio.
DTI, yeah.
That kind of transfers everything over. So now we're buying cars, but what about buying houses in the business name, right?
Yep.
What are some steps for people to want to establish their business and to purchase a house? Everybody and their mom wants to buy their house under a business name now.
Right.
I think it's anonymity. I think it's about just exclusivity. I think people want to be a little more private. They don't want it publicly put everywhere.
Right.
So can they avoid it being on their personal credit by buying a house in their business name? And second part of that question is, can they finance it, Matt?
Oh, yeah. I'll let you go first.
So when you're buying the house under the business name, to my understanding, all you really need is the LLC, right?
Correct.
But like I said before, you're not really going to get approved for a house using your business credit. So they are going to look, if you're doing hard money, they're going to look at the deal, right? And you just got to come up with a down payment. Now, as far as I'll defer the question to you, as far as because I don't have any house, like my personal house is on
Your
my
personal
personal credit.
Yeah.
But I know there's a way where you guys talked about it on Instagram where you can get the house if you're an entrepreneur or whatever the case is, where it only shows up on your
So
business
you
credit.
can do so if you're like you said hard money, right? For hard money lenders are going to look at your experience first and foremost, right? Your experience is going to determine how much of a down payment. If you're an experienced investor, flipper, and you have your HUDs or your closing disclosures to prove that you have the experience, typically 3-4 transactions in the last 12, 18 months is what they're looking at. Then yes, you'll do a 10% down, get 100% of the repair cost. Now, if you're looking for a long-term rental, it's more about the cash flow. Now, there's a lot of lenders out there that won't give a first-time home buyer this type of loan because they have zero experience. But there are some lenders that will, but interest rate-wise, you're going to feel the pain of you not having no experience, but they're not... But those deals are going to require, if it's a multifamily, 20 to 25% down payment, and we're looking strictly at the cash flow of the property. So basically, does the property debt service itself, and can the owner make at least a 20% profit after all expenses are paid?
Right.
And you can put it in your LLC, but the same thing is you have to run your personal credit because it's going to be personal guaranteed. So for all of those who think you can just go skip out of town and not pay the bank back their mortgage, no. They're going to hit you with that lien if you try to bail out and not pay the money. So there's ways that you can do it. Again, you mentioned entrepreneur loans.
Right.
Kiana's favorite, my favorite as well.
Oh, yes.
Yep.
I definitely feel like I should have trademarked that.
You definitely should have, right? You definitely should have. So there's different variations, but the most popular is using your bank statements to qualify for the mortgage, and we're using those deposits. The lender will use an expense ratio, 20%, 50%, basically backing out your expenses, and then average that out over 12 or 24 months, and then that's your income that they're going to use. No tax returns, no pay stubs,
Nothing.
None of that stuff. And you can also put that property in your LLC, even if it's your primary residence too. So this is very popular.
Right.
Both of us, with our celebrity clients, our influencers, they don't want nobody knowing where they live.
Absolutely
Right.
not.
And it's, people are crazy out here in this internet world.
Right.
So it's very important that you protect yourself. especially when you open up your LLCs. And I'm gonna throw a question back to you after I finish explaining this. But this is a prime way for self-employed business owners to buy properties. Those are like the three most popular. If you're looking for investment property, you do those asset-based loans. If you're looking for fix and flip, you do a hard money. And if you're looking for your primary, you can do the entrepreneur loan and use your bank statements, your business bank statements. Now, your business has to be in business for 2 years.
Okay.
I will say this. The business has to be in business for 2 years, but you can open up a brand new LLC for any one of those three that I just mentioned. Brand new LLC, you can open it up tomorrow and it will get approved as long as it meets the qualifications of those set programs. Right. So Terrific Progress, hit us up.
I close multiple entrepreneur loans. Let me just go ahead and plug this. Kiana Watson, broker extraordinaire with Watson Realty Co. But it does keep you anonymous and it does protect you, especially when the LLC is created correctly. There are some states where the LLC is public, like any business that I've created, if I did it in Georgia, you can go to our Secretary of State and you can see that I created that business, right? But there are certain states and certain areas where it can be anonymous, and you don't have such a way to trace you back. Like it can get deeper than that. Like it can go from LLC, it can go from actually having a trust create the LLC. Like you can go deeper and deeper and deeper into this to protect your privacy, which leads us back to you, Credit Dude. When they're establishing these LLCs, what are the best ways for them to establish them, and what are you seeing happening on
affordable ways? Because there's a lot of people out here that take advantage of.
So when you mean establishing, what do you mean?
Like starting up the LLC. Like how do you start an LLC? Right. Like what are your steps?
So I mean, to start the LLC, I always tell people you can do it yourself. That's my suggestion. If I always feel this is the thing. This is what I feel, right? You could pay somebody to do it, but if you're looking to buy a property or you're an entrepreneur, it ain't going to be the first time you do it.
It's not.
Facts.
So it ain't going to be the first time. You could literally Google your state, like New Jersey, create an LLC in New Jersey, right? $125 filing fee.
All on.
And you figure it out yourself, right? Or you could have somebody coach you. There's YouTube videos, whatever the case is. But I feel like when you do it yourself, you're that much more vested in it. You're that much more. You're like, yeah, I want to form this LLC. I want this to work. But it's like, yeah, man, just form this LLC. And it's like, whatever. You could do that.
Yeah.
But what happens with the second, third, fourth, fifth LLC? Next thing you know, you get more experience. You know which states protect you. You know which states hide it. You know which states. And then now you become a little bit, now you're really entrepreneur. Like I feel like when you do it that way, when you form the LLC yourself, you just have that much more like control, or not even control, but like you're vested in it a little bit more.
Right.
You know what I mean? Or you can just pay somebody $950 to do it for you. and you know what I mean? But that's, like I said, that's up to you. It's your preference. If you don't want to deal with it, don't deal with it. If you want somebody to form with you and give you the package and you're still vested in it, but I like to like touch exactly like what I'm doing. And that's why I like to create the LLC. And if you mess up, it's part of the process.
Yeah.
You fail, you learn, you fail, you learn. But obviously creating LLCs is not something we're taught in school. But listen, New York, you Google it. It's on there. Wyoming, Cali, Florida.
It's typically Delaware. Like on the Secretary of State. Like if you look up Secretary of State for your city, you can normally see how to create an LLC. I think it gets a little more difficult when you're doing S Corps and C Corps.
Correct.
And then you have to have, what is it? Like you have a board of directors, you got to have all these agreements in place.
Yep.
I think that's complex, but an LLC is it's somewhat simple to do.
Yep.
But I would still say it, take some advice from other people because it is public. So then you have to put layers in.
Correct.
Because the worst thing you can do, and this has happened to someone I know, they bought an LLC, perfect, got it in the state of Georgia, great, purchased the house in the name of the LLC. Okay, but you are the registered agent with your own personal address on the LLC. So it still comes back to you. So you're trying to be anonymous, but actually it's just a house in your business name that traces right back to you. Right. So that's that extra layer right there, which I'm very familiar with if you would like to work with us and with Watson Realty Co. However, no, seriously, it's an extra layer you have to put. Yep. You can't be the registered agent and you don't need to use your personal address. Facts. And then you also need to figure out, do you need an attorney? Do you need a trust? Like I said, it can get deeper.
Yep.
Depending on what you're like, depending on who you are.
Yep.
But at the very least, That's what you need. Like at least get an LLC, but just figure those out. That's why I say you can do it yourself, but it's counterproductive if you're doing it yourself and your name is all over it.
Yeah, and that's what getting the virtual office, it also does add that layer of protection too, because if you get the virtual office and when you register LLC, you're using the virtual office address for everything.
Yeah, not your personal address. Look, it's spooky out here.
It's crazy, bro.
The internet is a scary place, and if you have your business, people will straight up go behind the scenes and figure out everything. And you have your home address. Like, it's crazy out here. Like, you don't want people popping up at your crib.
I had that happen to me.
You know
one
what I'm
time.
saying?
What? So back in the day when I had my house address for everything, this is like 2012, 2013.
That's crazy.
My house address was listed everywhere.
Oh, wow.
Or my apartment, I should say. And I actually had a client knock on my door at like 8 o'clock at night, like, hey man, I'm just trying to get some dispute results. I'm trying to see if it's up on my credit. And I'm like, what the heck?
Oh,
and then that's when I started Googling stuff. That's when I discovered business credit in 2013.
Wow.
That's when I discovered virtual office. And that's when I discovered, I was like, holy crap, like, it's a scary world, spooky.
Yeah.
People's going to show up at your door. And that's the thing is, people couldn't find a way to find the stuff.
Yeah,
so definitely
it's up to you
people
to protect
are nuts.
yourself.
Yeah.
100%.
So you got us all. You've gotten us this far. You know, you're telling people how to buy homes in the name of their business, using business credit. Can you tell us some of the best credit cards? Because one thing about it, you know, you flex Amex all over your Instagram page. Like there's different levels of Amexes: the gold, the silver, the blue, the purple. Like there are
the green,
the green,
everything.
And so I think that I want to at least talk to people about how is it, like, I feel like you really favor Amex, and I tell them what's the best starter card for Amex and why you believe it's such a great card to have.
Okay. You have a whole shirt.
Yeah,
that
cash,
says,
debit, Amex. So it crosses out cash, crosses out debit, and just has Amex. And the reason why I like American Express is because of the amount of credit cards they give you.
Oh, yeah.
To start. So if you are so there's 14 business American Express cards, right? If you have good personal credit or already have a relationship with American Express, you can typically get 6 of those 14 credit cards in one day.
Damn.
Oh, wow.
And that's why I like them, because once again, if you're looking to start a business, grow a business, whatever, I wish I had one credit card when I started my company back in 2010. You know what I mean? So imagine what 6 or 5 credit cards can do with high limits. So with American Express, they say, what's the best credit card to get with them to start? As many as you can get. Okay. And that's my response to that, because there's 4 charge cards. That's the platinum, the gold, the plum, and the green card, right?
Okay. Which one is the best?
I like the gold card.
Me too.
I like the gold card the best. For what reason? The way I spend money, with business expenses and ads and things like that. I like the platinum for travel, because you get 5 times the reward points. I know we talked about that before.
I have the Delta Platinum.
The Delta Platinum.
Yeah.
So the thing is, if you get the platinum, the gold, the plum, and the green, you get all 4 of those the first day. So how do you do that? You go to American Express's website. If you already have a relationship, and what I mean by that is if you have a personal credit card with American Express, you can literally log in through AmericanExpress.com, go to business credit cards, start applying for those credit cards in the LLC that you just created last week with the virtual office, the bank account, everything correctly. You're using your personal credit as the guarantee, but guess what? They're not running your credit because you have the relationship already with them. So they're not running your credit. So even if you don't have a relationship with them, you can still do it the same way. Instead of applying for a personal credit card,
apply for business.
I have 0 personal Amexes. I have 0.
Yeah,
all of mine are business.
2 of mine's are personal. 1 is business. My gold is a business, and my 2 platinums.
The one Delta
one
I have is business.
Yeah.
It's personal. That's the only one that's personal. Everything else is business.
I love them all.
So now you get those 4 credit cards, right? I say get the 4 charge cards if you can the same day. Then what you're gonna do is get at least 2 revolving, because a biggest misconception is that American Express, you got to pay all of them in full. There's only 4 of them. 4 out of the 14 only require you to pay it in full within 30 to 60 days.
Agree.
So get the Delta one, get one of the Delta ones, get the Marriott one. I don't like the Amazon, right? Maybe get the Hilton one, get the Blue Cash, because now what you're doing is you can use those 2 credit cards for, like, let's say, InvestFest is coming up.
Absolutely.
Oh, I don't have any money to
get
go to
your vendor tables.
Right, so check it out.
Your VIP tickets.
I'm a new business. I have, you know what? I want to showcase my new business at InvestFest. open up an LLC now, get the business credit cards now, use the revolving credit card to buy the sponsor at InvestFest, use the platinum card to get your travel. Now you're separating everything, separating expenses. Now next thing you know, you have $10,000, $15,000 to buy product, to buy merch, to showcase at InvestFest, to blow your business up. So now it's like, it doesn't become an excuse anymore.
Right.
Because if you have access to American Express.
Absolutely. You have access to everything.
Everything. Because now you just paid your way to get in a room that you normally would have just been watching at home. Oh, let me get the virtual. Nah, man, there's no virtual. Spend $2,000, $3,000, $4,000, $5,000 with coming here, showcase your event, showcase your business, buy the brochures, buy this, buy that, buy the backdrop, get in the room. And that's why I like American Express, is because you literally can go from having zero money to having capital within a couple of days. And the other business credit card that I like is the Chase Ink card.
I have that one.
I don't have it.
Yeah.
I filed bankruptcy in 2013. So the one thing with Chase, if you file bankruptcy with Chase, don't do it. Pay them guys.
Yeah, because they hold grudges.
And Chase, they so tight with their money.
They
like,
tight.
and I bank with them. And they have great benefits. Like they make it easy as a business owner, especially I'm so transactional. I'm cutting commission checks, money in, money out. They make it really easy, but I do like the Ink card. Like I definitely like it. I swear I woke up one day and it just popped up. I don't even remember applying for the card.
And it just came.
It just came in the mail.
You need this.
And I was like, what? I called them and it's like, I'm like, no. Okay, y'all are getting out of control here, but I do think it's great to get the credit cards, but use them wisely. So often if we get access to these funds, like we have to give them a fair warning. And we were just talking about this offline. I'm like, okay, let's quit with the whole, I bought a Gucci shirt with the points. Like, you spent the money. You spent $100,000 to make the points. And now you're going to say, oh, now you spent $100,000 cash that you had to physically pay back.
Right.
And now I have enough point to buy a Gucci shirt. Well, you could have just bought the Gucci shirt. I just think that we need to stop using that mindset as an excuse and kind of be a little more responsible. Now, you probably would have bought the item anyway, but let's also make sure that y'all see the caveat. You spent money on the charge card, and Amex, they want their money. Like they send you 3 text messages, 2 emails. They want their money, and they want it early, actually, on time. And the same way they keep giving you credit, you do one mishap, they'll take it back. They'll snatch it back. So what is some advice for people that are out here getting these cards, like making sure that they're spending responsibly?
Right.
And then tell them, how do you feel about these points?
So it all goes back to the same thing I said before. Business credit, if you don't have the same principles from when your personal credit was established, you're going to think, oh, I got 35 grand. I'm good. It's not reported on my personal credit. So you're out here thinking you got 35 grand, just do whatever you want. You got to pay it back.
Absolutely.
You got to pay it back. So definitely, I would say even be more careful when you're spending money in the business, because you got to you got to pay that back eventually.
Absolutely.
You know what I mean? So it's like, if you are going to get a $35,000 Chase credit card, make sure, or any business credit card, make sure there's some type of return on investment with that card. And that's going to be worth more than a Gucci shirt. That's going to be worth more than any points. Because if I tell you, hey, Matt, man, I got a $35,000 credit card. What can I put this on? And you're like, you know what, man, I got this opportunity for you where if you for $20,000, you can make 60, whatever that is, whatever business opportunity, whatever the thing is. I'll tell you what, though, if you get a sponsor table at InvestFest, you're going to make your money back.
Facts.
Maybe not by the merch you sell or by the product you sell, but by the relationships you make.
Absolutely.
So there's a return on investment on what you spend. Doesn't always have to be physical. It could always be long-term, whether it's a sponsor ticket or something like that. And that's responsible spending. But just like you said, if you're spending $100 grand, just spend $100 grand and get these points. Now with points, they're good. You know what I mean? You can get free travel. You can get this stuff. But once again, the $100 grand you spent, you still got to pay that $100 grand back.
You have to pay it back.
That's the point.
You know
I love my points.
I think we're just kind of getting a misconception. Like, if you're going to spend the money anyway, it's a benefit to having the points, but don't get so caught up in the point
100%.
that you forget that you spent the money to get the point.
And I think we've all been there.
Oh, I know I have. That's why I'm trying to warn
there.
y'all. I'm trying to help you. I'm really just trying to help you because I've been through this before.
Yeah, I've been through that shit.
Getting caught up in watching the point.
Yeah.
But you just got to remember, you're spending the money to get the point.
Yeah, the Amex is a beautiful card. I love all the benefits, like especially you book your hotels through Amex on the app and stuff like that. You automatically get upgraded depending on what kind of card you have. Like, so any hotel, like if I know I want a suite and I know they have availability, I'll just go buy the room below the suite so I get that price. price, that's a little hack for y'all. I'll buy that price, right? I'll buy the king room, knowing they got the suite available, and I know the Amex is going to upgrade me automatically to the suite, right?
Free.com.
Free.com. I love it, right? Then you're going to get breakfast credits and all this other good stuff, like $60, $80 a night. Whew. Music to my ears, right? Thank God for Amex, right?
And the thing is, too, with the American Express card, whether it's the Platinum or the Delta Reserve, whatever the case is, you get access to these lounges.
Oh, yeah, absolutely.
If you have a, this is the thing, if I'm in that lounge or sitting in first class,
like Delta Lounge,
and I'm not talking about credit, then what are you doing in there?
Exactly. You're in different rooms, actually.
Right. You're just sitting next to a doctor, to be in a room. A pharmacist, a lawyer. You're sitting next to all these people because, unfortunately, your average person isn't in these rooms because, unfortunately, people like us don't have the knowledge when we were younger to get in these rooms. I didn't know about what the hell a Centurion Lounge was when I was 18.
Delta Club, none of that.
Right. So imagine now you sit in first class, you sitting next to a pharmacist or a doctor. Oh, what do you do? Yeah, man, I do credit.
Yeah.
Credit. Yeah, I'm a mortgage lender. I'm a realtor. Oh, what?
Yeah.
And then
it's happened like that.
It's a connection.
That's why I only fly first class now. Right. I've become bougie over the past couple of years. I'm not going to hold you up.
Me either.
I'm not even going to hold you up. Credit makes you ready. Yeah, it does.
Absolutely.
Credit makes you bougie.
It does.
Oh, I love that.
Credit absolutely makes you bougie.
I ain't going to hold you up. Once you go first class and shit, it's hard to go back to the back of the bus.
Yep. 100%.
It is.
They don't give you no mimosas. I'm
they
sorry. Let me digress.
Let's focus. Let's get back to it. So now, we already talked about business credit. We talked about establishing your credit and getting those prepared. But let's just, we got a little bougie. Let's bring it back down. Let's reset the room. Reset the room. Let's talk about, like, real quick. What are 3 steps you would give someone that knows that their credit's not the best and they want to buy their first home? They need to establish credit, because we have some people with nothing on their credit or they get it all wiped out, and that also like prevents them from purchasing. So what is like 3 trade lines or 3 things they should get to really help them improve their score that's simple to get?
So 3 trade lines or 3 things they should do?
3 things they should do.
Okay. So number 1 is look at it. It's crazy how that sounds, but Matt should not be the first person that looks at your credit when you're applying for a mortgage.
1,000%.
Unfortunately, Credit Karma should not be the account that you also look at to look at your credit. When you go to Matt, because obviously it doesn't show Experian. So I would say the first thing is you want to attach yourself to a credit monitoring service that gives you all 3 credit reports, that gives you alerts. And there's a lot out there. There's Identity IQ, there's Experian, MyFICO, whatever the case is.
Yeah.
And that's the very, very first thing. Is you want to look at your credit report 100% before you speak to yourself, to Matt, to anybody, before you start a business, because how can you fix or improve what you don't see?
Correct.
You know what I mean? So definitely look at a tri-merge credit report that updates every 30 days, because the changes when you pay a credit card off or whatever the case is. Now, the second thing is, now we're in May, time's flying, right? In July, the great thing is that paid medical collections will be off the credit report.
Well, nice. Talk about that for a second, because I see that all the time.
Right. So that's the second thing I'm going to say, is that to improve your credit, if you have paid medical collections on your credit report, you don't really got to, if time's not the essence, in July, they're automatically going to come off. Paid medical collections. Right?
Paid. Not unpaid, folks. Let's be clear.
Not unpaid.
Because they're going to say, Jose on Ranch and Jim said, I got medical collections, I don't need to pay them.
No. Paid.
Pay the collection.
Okay.
Paid.
Let's be clear.
And the thing is I think that medical debt is probably the biggest thing that we see on people's credit report.
Agreed.
Yeah. And I'm an advocate of pay it.
Yeah.
Because you never know when you're going to have a broken leg again or a root canal. You got to go back to the doctor's office. Pay the medical bills. But the thing is pay the doctor's office. Mm-hmm. Don't pay the collection agency.
Why is that?
Because now you're in a settlement or a deal with the doctor's office. Think about it. Normally, a doctor's office is a mom and pop. It's not like a doctor, like a huge hospital.
Yeah.
Right. Normally, you mean to tell me that if that doctor, you say, listen, man, I owe $1,000, I want to pay, they ain't gonna accept it. They're gonna accept it. So now, what does that mean? You just paid them. So that collection agency reporting that debt to your credit report is in violation, because you don't owe the debt to them anymore because you already paid it.
Oh,
you know what I'm saying?
So that way they have to remove it.
I like that.
And the thing is like now the doctor's office. That's why I'm a big advocate of paying medical debt if you have to. There's people that say, "Oh, it's a HIPAA violation. Is this?" listen, that's the fraudulent stuff that I don't like to deal with. If you owe the debt, you might have to pay it back.
Yeah.
That's just the way it is.
Well, I think that's the best credit repair anyway.
Right.
You paying your bills.
You got to pay it back. But this is the thing. Instead of paying the collection accounts on your credit report, call the doctor's office. Hey, man, I owe you $2,000. Can I pay you $50 a month? Absolutely. Boom. Now you don't owe that collection agency anymore and it's off the credit. But let's say you did end up paying a collection agency and it's on your credit report as paid in July, is coming off.
Nice.
The other second thing with that is, as of next year in 2023, medical collections under 500 are going to come off too.
Oh, that's amazing.
Really?
So if you have medical collections under $500, they're going to come off your credit. And why do I say these things? Because start preparing. If you're looking to fix your credit, right, or improve your credit score, and all you have is paid stuff on there, you don't really got to pay anybody to fix your credit. Just wait 2 months. They're going to come off. Or just call the creditor and be like, hey, man, I know this is coming off in July anyway. Can you take it off now? Because, listen, it's going to come off in July anyway. You will see that getting those paid medical collections off is going to raise your credit score up 60, 50, 70 points. Because a lot of times people come to us, listen, man, I have nothing negative, but I paid medical collections 4 or 5 years ago.
Wow.
Can you fix this for me? Oh, I need a credit sweep. Somebody was going to charge me $2,000. Bro, you didn't need a credit sweep for this, man. You got 2 paid medical collections on your credit report.
Yeah.
You know what I mean? So, but you wouldn't know that unless you look at your credit. But if you go to a credit repair company without looking at your credit first, they're going to be like, oh, yeah, nah, man, this is a $3,000 package right here. And you just have 2 paid medical collections.
So $3,000 package.
They're trying to get that money.
You know what I mean?
Basically.
So that's the second thing is look at the medical collections. And this is the thing. It doesn't apply to like T-Mobile. It doesn't apply to everything else. I'm a big advocate. Obviously, I own a credit repair company. You can still legally dispute your stuff. You can still legally dispute everything, even if it's not medical, even if it's not, under $500, still dispute it. But if it comes back verified and it says it's yours, pay it.
I love it.
You can't evade the debt. You can't evade debt that is yours, that you took out and you just simply chose not to pay.
Yeah.
You're going to have to pay that person someday. You know what I mean? And a lot of times when you do pay that person, they're going to be like, hey, man, since you paid us, we're going to give you another credit card.
Yeah, we're giving you another shot. But see, that's the thing I look at too, right? I always say the best credit repairs pay your bills. Yep. And it blows my mind when I see people, they want to buy real estate. And then you look at their credit, your credit is shit. It's like, why are you not paying your fucking cell phone bill, bro? How you expect the bank to trust you with $500,000 if you can't even pay your Verizon bill? Right. Like, it boggles my mind, people's mindset sometimes.
They just want to skip. Yeah. And I think that, as people plan and prepare and they save to buy a home, it's like you save this money and like, oh, well, I have $3,000 in debt. Well, pay the $3,000 in debt and then start again saving. I think that, and of course, increasing your credit and disputing items and working with Credit Dude. But at some point, if it's you, it's your debt and they've proven it, pay it so you can prepare yourself to buy it.
And move on.
Right.
And move on to something else. Look, Jose, you've been giving us a lot of gems. I know you got to go. We appreciate you coming on the show, but you got to leave us with one more gem for the audience before we get out of here.
Yep. So I would say one of the biggest things which goes into personal credit and business credit, right? Which a lot of people think like, oh, I have this collection, I have this charge off, I can't get ahead. Like you don't need, just like how you don't need an 800 credit score to buy a house, right? You don't need an 800 credit score to borrow money. So I think one of the biggest things is if you know you want to start a business, if you know you want to start something, if you know that you're looking to take your life to the next level, don't pay a credit repair company $2,000, $3,000 to wipe everything off, right? It's not going to fix your problem. Instead, maybe take that $2,000, $3,000 to settle whatever debt you couldn't take off, or apply for a personal loan. If you have a charge off, if you have a collection, if you have this and it doesn't come off your credit, apply for a personal loan or borrow money from a friend. Let them get the loan for you and say, listen, man, I'm trying to pay off my debt. I'm trying to start my business. Listen, this is my business plan. Now that's different than you going to yo, man, let me borrow $2,000. I got to pay this. Listen, man, I got this business plan. I got this. I want to, there's credit unions. There's even places that have high interest.
Oh yeah.
But this is the thing. If you could borrow $5,000 to settle all your debt, now your credit score goes up. Now you can get business credit. Now you have one installment loan of like maybe $150 a month. But all your debt is clean. All your debt is paid. You're not looking over your shoulder. You have no wage garnishments. You have no levies. You have no nothing. Now, when you start building your business, you're using the same principles from your personal credit. So now what happens? Man, I got these payroll expenses. I got this. Guess what? Get a loan, pay your expenses, make your monthly payment, And then now it's the same thing. So I think the biggest, what I want to leave people with is, if stuff doesn't come off your credit, it's okay. Pay it somehow. Either borrow from a friend, get your credit right to the point where you can maybe get a personal loan from a credit union or something, and then start over. And then now build your business, now build business credit, now invest in real estate. But just like you said, how are you going to buy a $500,000 home and you owe T-Mobile $250?
Yeah.
True.
Agreed.
Doesn't make sense.
Drop some gems. Certified gem dropper.
Certified gem dropper. Jose, tell them how to find you.
Yeah, man. So I appreciate you guys for having me.
Thank you for coming, brother.
Thank you so much. On Instagram, I'm the Credit Dude. And I always tell people, check me out, see what I do. I'm not going to be one of those guys that tell you to commit fraud. I'm always going to tell you, do things the right way. And if that means that you can't buy the house in a year and you got to buy it in 3, it's okay. But that doesn't mean that you can't start working on your business credit and going after your dreams now, because there's too many resources right now that you have in front of you that shouldn't prevent you from opening up your business or following your dreams, because you never know, is that one person that you speak to, that one connection, that one relationship that's going to take your life and your mindset to the next level. So check me out on Instagram, The Credit Dude, and I appreciate you guys for having me, man.
Love it, Jose. We appreciate
right,
you for coming by, brother.
Thank you, man.
Thank you so much for coming.
Thank you.
All right. Y'all know what to do. Like, comment, share, subscribe. We love you guys for tapping in with us. Tapping with our guy, Jose, the Credit Dude. He's not a scammer. He is one of the legit credit companies out there. I recommend him to all of my clients, and he's helped hundreds of my clients over the past couple years. So I am vouching for Jose, the Credit Dude, personally. All right. So this is Matt Garland, NMLS number 58700, better known as MG, the Mortgage Guy.
And this is Kiana Watson, license number 317576. Broker extraordinaire. Thank you so much for tuning in to another incredible episode of the Rants and Gems Show. Have a great day.
Peace.
Peace out.